Real Estate with Champions Real Estate team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. Appreciate you joining me today. So every Wednesday we jump on, kind of give you a rundown of what's gone on in the real estate market over the last week as we're coming into the Labor Day holiday. So joining me today is Russ Williams with Williams Mortgage. He'll be kind of talking over what's going on in the mortgage industry and what's coming up over the next couple of weeks that we should kind of be watching out for. So we'll jump straight into our graphics that we look at every week. So over the last 7 days, we've had 440 new listings, 303 new contracts written, so accepted contracts, and then 447 hopefully happy new homeowners in their new homes here. So looking at the numbers, we're sort of down just a little bit from last week where we had just about 500 homes go on the market, and we're about 50, from each category, 50 numbers down as far as each one goes. Which is an uncommon, I think, as we get into the holiday weekend. Over my 14 years being in the business, I think holiday weekends are hit or miss for all intents and purposes as we come into them. Some people want to get them on the market because they're in the holidays. Some people don't want to because they're going to be, have people over or things like that for the holiday weekend. So it just kind of depends on it. You have people coming in from out of town that may be relocating to the Omaha metro area. So you got an influx of buyers potentially since they have that extra day or take the Friday and have a Monday off, so they have 4 days essentially to look. So in that regard, that's kind of what we're seeing. From that perspective, I think what we talked on in videos before, as we see, getting settled into your schedule for the fall with if you have kids or anything like that with activities, and just kind of getting back in the swing of things as we go through here. So that we'll see activity typically pick up historically. So looking at the 30,000 foot view aspect of it, pretty same song and dance we've had the last couple of weeks. 2,300 homes, about 1,300 and so homes in the Douglas and Sarpy County areas. So that's the Omaha Metro. Existing home sales are available. The active listings, about 566 listings. New construction, 764 months of inventory, kind of still at that 1.4 month supply of inventory. Our average sold price over the last 7 days hasn't really changed much. Usually don't see that number go up or down too much, obviously week to week basis, going through that standpoint of it. So still overall, we're still seeing a very active market. I actually just ran into one of a past client friend when I was at a lunch today, and just, they're asking, we're seeing our values go down potentially. And I'm like, not necessarily, we kind of touched on that, as agents, we're talking that, there's no inventory, we're low inventory. Or actually, we have seen a lot of inventory. It just goes super quick, So I think we are up when I was looking at the numbers. I think about 12% from our active listings from year to date from last year. The number of active listings in that regard. So even though you're reading the press clippings and some agents around town, oh my gosh, there's no houses on the market. There are houses on the market. They just go super quick. So we don't see that we're jumped up to 4,000 active listings in the Omaha Metro, Omaha and Lincoln MLS because they're gone so fast. So that's something that, knowing that if you are in the market, the intensity has slowed down a little bit. So we're starting to see some of these numbers creep up a little bit, which is good. So that, you don't have to run out after work or over lunch hour to find a house, get a contract, you're bidding against 10 bids. Those houses that are up to date, and have all the bells and whistles, those ones are going fairly quick. Some of the ones that need a little elbow grease, maybe they may sit there for a little bit, but depending on how they're priced, so if those sellers are looking at it going, hey, my neighbor's house down the street sold for X or this amount over listing price, but you have failed to do any of the deferred maintenance items, that's going to reflect in that that price that you're going to list the house. So those are some things that, when you have an educated agent knowing exactly how to price your home, and realistically pricing your home. So I think that's just something as we go into this market and more of a normal market. It's funny, I hear agents go, well, what's a home inspection resolution addendum? Because some agents haven't done a home inspection, since they've been licensed. If they've only been licensed for the last year and a half, 2 years, you might not have dealt with those type of negotiations on the backside after you get an accepted contract. So those are some things, working with an experienced agent, working with a team of agents here at Champions Real Estate Team, we can walk you through those processes, both on the seller side and the buyer side, going through that. Because sellers haven't had to deal with them. I got to make repairs, or things of that sort, or how can you negotiate it back and forth? So there's tips and tricks that we can do with that. I'm happy to talk to anybody about that. So give me a holler, 402-672-7670. Go over any of that kind of information for you. So yeah, as we see, the real estate market is still very active. I think the biggest key is we're not having the huge intensity, where it's getting really, the wild west where it had been the last couple of years, which is nice for both buyers and sellers in regards to that. So you're still capitalizing on those sale prices as a seller. You've capitalized on that appreciation. You just may not list it at 400 and get it, accept a contract for 430. But at 400, it's still a great house because that house, a year ago, 2 years ago, may have been at 350, 375. You've already gained that appreciation, and it's just trying to not necessarily be greedy about the market in that standpoint of it. So obviously, all that, if we need to buy a house, we need to get a mortgage typically for the average person out there. So let's talk to Russ and see what's kind of going on and what to expect. I know he and I, before we got on, we we're just talking about what's going on. So there's some big numbers and some reports coming out that are, going to affect, I think, what the mortgage rate's going to be potentially doing here in the near future. So you're on mute here, Russ, to make sure. There we go.
Yeah, Mark, we have seen interest rates move back up to the levels that we saw towards the end of July. And that's not really unexpected. We kind of thought this might happen in the middle of summer. Of course, now we're moving into, gosh, I can't believe we're hitting September tomorrow. But we have a very busy next 3 weeks as far as economic news that could have a significant impact on mortgage rates. Without getting too boring for folks that don't want to talk economics, Friday we have what's called the non-farm payroll report, commonly called the jobs report, that typically jobs, Mark, are the last thing to fall before the National Bureau of Economic Research would identify that we are in fact in a recession. And recessions typically will lead to lower mortgage rates. Now, we have some other challenges that might prevent rates from moving down, and that's what the Fed is being actively involved in. In fact, on the 13th and 14th of this month, we have both the consumer price index and producer price index numbers coming out, and we'll be watching very closely to see if actions are starting to slow inflation down. That very next week, the week of the 20th, 21st, the Fed is going to be announcing what their policy decision. They meet every 6 weeks, and the Fed has been raising short-term rates, Mark, to try to slow inflation down. Now, it's important to know, and I know some of you that have watched every week, you already know this, but when the Fed raises short-term rates, we actually can see mortgage rates improve. And the reason for that is when short-term rates are being increased, things like credit cards, student loans, and auto loans, that is reducing the likelihood that you might want to borrow money. And that acts as a brake on the economy, and it acts to start to maybe temper and slow down inflation some. It's important that you know that, because inflation is the enemy of mortgage bonds, which are what drive mortgage rates. So when we see inflation numbers come down, mortgage rates typically come down as well. And the Fed has indicated that they're willing to put the American public through some pain. They've used that term over the last week. Multiple Fed governors and the Fed chairman, they're willing to have the American public incur some pain to get inflation under control. We just saw today that the European countries are seeing record inflation. And so everybody is trying to fight inflation right now. If we see jobs start to soften at the same time that we have the Fed actively and aggressively fighting inflation, that's likely to trigger the identification of a true recession. Now, some people think we're technically in one, but if in fact we do get into a true recession where jobs start to soften a little bit, that's going to suggest we might see lower interest rates. So it would be a great time to be ready to buy a house right now. We could see some improved rates, and you might have, as Mark mentioned, some opportunities that you might not have had earlier this year. This is a great time to get out there and buy a property. Now, certainly, we've mentioned in the past, marry the house and date the rate. If we do see rates come down next year, we'll refinance you into a better rate and improve your cash flow. So buy the house at today's money as opposed to what you might have to pay next year at an inflated price, because as Mark mentioned, we still have an excess demand versus supply balance, and that's continuing to put some upward pressure on prices. Now, the media, of course, and I'll shut up in a moment, Mark, but the media is talking about a deceleration of home price growth. They're not talking about home prices dropping. They're talking about the rate of increase in valuation dropping, meaning instead of seeing 15% appreciation on homes over the next 12 months, we might see 3 to 5 to 7 to 9. That is a reduction in the growth of home prices. So we're still seeing that growth, especially in the lower price points, as people are just trying to get a foot in the door and get a seat at the table with the house. So, Mark, this is a great time to buy. And for those of you on the fence, give his team a call, and they'd be happy to help coach you through it.
Yeah, and I think that information is basically what I was going to say when you got done. But that's, like you said, it's the price today. I know when we like, as we talked before, I built a house 4 years ago for my family, and the cheapest time to buy new construction was yesterday, and that was true in when we were looking to build our house in 2018, before you hit all the COVID and the supply chain, crises and all that kind of fun stuff. And that was true then, and it's even more true now. Even in new construction or existing, that, like you said, I like the friend that I ran into at lunch, they kind of brought up that, oh, we're going to see a decline in our prices, and I was like, I don't see that. You may, like you just said, the appreciation, percentage may decline, because I don't think you can't sustain 15% growth. Your buying power and the people trying to buy a house, it's just not healthy in that regard. So you're going to see those, everything's a cycle, going up and going down. And that's how, I've been in since 2008, the housing bubble at that time, when the mortgage crisis hit, it just, everything goes up, everything goes down. And I think that, a 3 to 5% increase is still an increase, and that's, going through that, it's the $20,000 increase on a $400,000 house, so you buy a $400,000 house today, you pay $420 for it next year, and depending on what your interest rate is, buy that house at 400 at a 5.5%, 6% interest rate. Next year, let's just, if rates do go down to 5%, 4.5%, you drop that percent, you gain more equity in the house, from that, and you may have 10% down. Let's say you put 10%. Now you may hit that 20. You may drop your mortgage insurance premium, save that $100 to $150, $200 a month just on PMI, and then save on your rate. So your payment could drop a couple $100, for that process. And then, if you were to buy that house next year and you don't have that cash saved up to buy that 420 house, now you're paying PMI plus the, the increase that you need to bring to the table potentially, at that lower interest rate, which, I don't think is going to be as big of a savings. I don't have the calculator in my head, but, if we sat down and did the math, I think you would see that would be an advantageous thing. If now is the right time for you to buy a house, don't just jump into it because you need to, without the education and without knowing exactly all the information that you need to make that decision. So that's what we're here for. I had a client call me last week. It was the last week or the week before, about maybe buying a house next year, the end of next year. And I'm like, hey, well, what's stopping you from buying one this fall, where there's going to be probably historically less buyer activity? And if that perfect house comes up, great, get it at this rate. Exactly that same thing I just said is what I was talking to my client about. He's like, well, I didn't ever thought, okay, yeah. I go, and then if that perfect house doesn't come up in the fall, great, let's wait till next spring, wait till next August, wait a year from now, or, if you're thinking new construction, what's the pros and what's the cons of that? So those are conversations that I have with clients, past clients, friends, family, all the time. And ultimately it's what makes sense for you based on the information that we can get to you. And if we don't know the answer, we'll find the answer out for you. So we're not just going to make something up. If we got to call Greg Lemon down at the Real Estate Commission, give him with regards to that kind of stuff, or anybody, mortgage questions, come to Russ. If he doesn't know the answer, he can find it out himself too. So, but as always, we're here to help you. Give us a holler, call us, text us, email us. We're open to talk, or comment on any of our social media platforms that are out there as we get launched out there every week. So, but appreciate everyone listening. Thank you again. And if you have questions, comments, reach out to us, and have a great Labor Day and have a great holiday weekend. And we will see everybody next week. And Russ, got anything else you wanted to throw in there?
Nope, that's it. Have a great week. Happy September.
Awesome.
Happy Labor Day weekend.
Appreciate you jumping on, Russ. Thank you.